Hello and good afternoon. Today's the video for July 14th of 2025. We've closed at our third strongest close ever. What does that mean? The market's bullish. It's really bullish. There was a reason for us to go down today. We did not. So what's really important is the news, but more importantly, the reaction to the news. When we think stocks are going to go down, but they don't, that actually tells us more than when we think they're going to go down and they do. Why? Because it likely means there's an imbalance between buyers and sellers, sentiment, something. There's an imbalance. Something's not right. And we're going to find out tomorrow whether the bears have any momentum because, like I keep saying, if bad news cannot make us go down, what could good news do? Huh? What good news? There hasn't been much good news lately. Well, what if there is? If this doesn't take us down tomorrow and we had another reason to go down again today after another reason to go down last week and another reason the week before, that means we're climbing the wall of worry, right? We've gone all the way down the wall of worry. Some people are slower to go all the way back up, but we're already at new all-time highs, which is why I'm kind of relaxing now. And the market's likely going to go further. RBC hikes their target as well. Investors have been telling us that they are ready to start pricing in 2026. Let's go. Why? Because Goldman Sachs, they did it first. They raised the target for the second time, as we told you before. So what is American exceptionalism, and is it coming to an end? Not in today's video, because right now, big, beautiful America is still number one. Yields are a little bit higher, so this is like the one fly in the ointment. And I'll show you one date here specifically. All the other charts are already really bullish. If you're clicking on today's video, you're not clicking because there's clickbait. So if anyone's complaining about that today, please unsubscribe. I don't want to see you here again tomorrow. There's no clickbait about today. It's my face, and it says the date. So I know there's going to be less views today. That's perfectly fine. I'm going to give you lots of valuable content. And as a tease, here you go. Here's the two ideas I talked about. SGML, Donut, I'm ready to buy more. And right now I'm 96.6% cash, but hey, I did pretty good today. I'm up by 0.1% because SGML is up nearly 7. Pretty happy with that. All right, where was Liberation Day or Liquidation Day? It's basically what it was. It was a liquidation. It was right here, March 25th. So if we go back, no, sorry, when Trump caved, it was right here. Yeah, it was right in the state right here. So we went to a high of 4.35 and we went down to a low of 4.3. Where are we right now? We're in the middle. I don't talk about this because people don't really know, like, what retail traders who click on stock market videos don't really care about bonds or know, oh, well, 4.43 on the 10-year note. That really matters. It doesn't for them. This is called the risk-free return, which means you're guaranteed to make this much money over 10 years from the government. If inflation averages to 2% on average and you're getting paid 4.437, you're doubling your money. If it goes back down to 2 and we go higher. What does that mean? The inflation data tomorrow matters because this is likely what's going to be impacted. Do we go back to 4.5, back down to 4.2? Because those two numbers matter. Back below 4.3, there is potential we could actually see the 10-year note go down, which means that the Fed was wrong and we got to lower rates. Tons of articles on that today. If it's not, this is stubborn. This is not doing what it's supposed to. It's supposed to be waterfalling. And then the last chart here is the monthly one. We focus on SPY because, again, it's a stock market video for retail traders. But this right here, back below 4.2, like that's a really, really, really important number. This was my best performing video on the channel. I said, this is very scary. People love scary videos. They don't like boring and predictable wall of worry where the market goes higher slowly but surely, bit by bit, and step by step, and boring, which means that America is still number one right now. There is no alternative. You buy America or you're going to miss out. Why? Because America is number one. All right, let's go here to Trello and look at our notes and see what we have here. I did leave my notes for you on the weekend video too, which were detailed for my group. I encourage you to click on those if you want. Here's where we were going into today. Here's where we are now. Let's go here. We had an engulfing candle earlier. We did not close above the high. So we got a failed breakdown. So the thing about technical analysis is that a lot of it can be subjective, but at the end of the day, how do robots do trading unless they can define what each candle is? And I know because I've been doing that recently. Robots don't go, oh, well, if this, then that, and if I feel like Trump said the right thing, then I think stocks will go up, or if Powell's fired, then I think stocks will go down. Algorithms don't think like that. They don't think. They have conditions. It's called a statement. If then. It's just logic. So here, there's more than one way we can look at it. Purely by looking at our bull and bear recipe, what we have right now is we have a failed breakdown, and now we know we're still 2 out of 4. Actually, no, we're going to go to 3 out of 4 because actually we have the higher low, then we got the failed breakdown that diverts back to 2, and then today we did make progress. So we gapped up and went higher. Gap and go, huh? Yeah, gap and go. I'm going to go to 3 out of 4 because we did print the higher high. Failed breakdown, higher low are sufficient from here. Well, we printed a higher high. So I'm just going to leave it like that. I'm just going to go 3 out of 4 bull. Why? Because that's all I need to know. I don't need more than that. 3 out of 4 bull just means cautiously bullish. That's pretty obvious to me. Hopefully it is to you. If it is and you want to support me, smash a thumbs up or subscribe to the channel. Thank you ahead of time. In terms of notes, we got through it. So we were looking for potential for us to go down into the first half of the week. That's the data point for tomorrow. Expected to be hot. If that one comes in bearish, the daily chart's in focus for tomorrow, because then we have PPI coming out on Wednesday morning. This is consumer price index. That is producer price index. So before you can consume something, people have to produce it. So if they're producing stuff and it costs more, you guessed it, when you go buy it, you're probably going to pay more. It's a leading indicator. It's like a preview for the future. The rest of the week, I think it's really about Netflix. I didn't even check and see what the earnings report forecast was. What's the whisper? It's a beat. Why? Because it's Netflix. And everyone likes to Netflix and chill. All right, on the 17th, we got it coming in hot and heavy at 4 p.m. Goldman Sachs raises their targets. I got these 2 stocks, so I'm going to buy these things. If you want to subscribe, I will update you on both of these as we go through on the streams. Right now, I'm 96% cash, and that's today's video. Thank you for tuning in.